and good afternoon to today's webinar for Blencowe Resources. My name is Jason Robertson. I'm the analyst broker here at First Equity Limited in London. First Equity are the joint brokers to Blencowe Resources. We also have Mike Ralston, who's the CEO of Blencowe Resources. And the reason we're here is that last week, the company Blencowe Resources announced its pre-feasibility study on its advanced stage graphite project in Uganda. Now, that announcement of the pre-feasibility study marks quite a major milestone for the group, and as a consequence, First Equity updated its price target on the company from 27p per share to 59p per share. That's based upon a risk evaluation on their graphite projects. If you look in comparison, the shares are now trading around about 4p pence per share in the market, with a market cap of about £7 million. The market is valuing the company unfairly and quite wrongly, we believe, as an early stage company rather than the advanced stage project which they've got at the moment. So there's quite a bit of a mismatch there between the actual stage of the project and what the market believes the project stage is at the moment. Now, Mike's going to be given a presentation that lasts about 20 minutes on the company, just explaining about the details on the pre-feasibility study that was announced last week, and also explain about the next steps ahead in terms of moving the project towards a production and commercialization point. At the end of the presentation, there will be a chance for people to ask questions and those to be answered by Mike. So I'll just now hand over to Mike to start us off with the presentation.
We're going to go through this investor update, which is really, as Jason says, detailing our pre-feasibility study results and what that means for Blencowe and obviously the project going forward. So there's some of you, I'm sure, that have been on the podcast before, but I'm going to assume that there are people that haven't. So forgive me for just going through some of the stuff that you might know already. The ticker is BRES. Our market cap at 4p is around about £7.5 million. We've got about £800,000 in the bank, 177 million shares issued. So we're still a small share structure. It's not blown out. We're very conscious with our cash, and we keep our overheads very, very low. Almost all of our money goes into the project and developing the project. So we'll continue to go that way. We've got a good board that represents different skill sets and experience. A couple of corporate people there in Cam Pierce and Sam Quinn. Alex Passmore is a very experienced geologist. I've had a background in developing projects as both CFO and CEO, and I've been doing this for about 20 years. So I've taken 2 projects into production. I'm very ably helped by an incredibly capable COO who's done many projects and feasibility studies, Ian Waring. And more recently, at the beginning of this year, we hired a very experienced country manager in Uganda who's an experienced engineer, particularly in terms of building things, EPC, and he's obviously going to be leading the campaign to build our plant and our infrastructure to get us into production. And more recently, we've employed a very, very experienced sales and marketing advisor from the US, and Chris Whiteley has been selling and marketing graphite into the world markets for about 30 years. So he knows pretty much all there is to know about graphite, and we appreciate his help going forward. Just at the bottom of that page, we brought RAB Capital onto the register in April. They took a 10% position in our company, and we're very happy to have them on board, and obviously look forward to working with them going forward. In terms of the portfolio of projects on the left-hand side there, we have an incredible tier 1 graphite project called Oran Cross, which is in northern Uganda, and I'll go into some detail about that just now. We were awarded a 21-year mining license in 2019, including all environmental permits, so we don't need to do anything more to go into production moving forward. Obviously, the work that we're doing in terms of the feasibility studies is very much internally focused to make decisions to mine and to raise capital, but we've completed the PFS at the end of June, and recently published and announced it onto the market, I think about a week ago, showing a very healthy $482 million NPV. That's post-tax 8% and an IRR of 49%. And that shows, I guess, that we've got a project of some size and scale, but there's plenty more, because that's only over a very short 14-year initial life of mine, and Oran Cross can be in excess of 50 to 100 years in terms of its life of mine once further drilling is completed. We are going to be looking to go into production with a pilot stage plant from the end of next year, second half of 2023. And we've already started the pilot stage study and starting to talk to offtake parties, starting to talk to strategic partners, because we obviously want to fund that and we're going to fund it at the project level, excuse me. So we're starting to build those relationships. We've had an incredible amount of interest coming from strategic parties, both funding parties, offtake partners, since we announced the PFS a week ago. And I've had a bunch of calls already today. So there's a lot going on, which is fantastic news, and I guess it represents where this market is going in terms of graphite going forward, and what people are beginning to realize, that there's going to be a scarcity. We also have another project that we acquired a couple of months ago called Aquila Congo. It's a nickel project very near to Oran Cross, highly synergistic both in terms of location and in terms of the fact that it's another very important battery metal in terms of nickel. It's an exploration project rather than Oran Cross, which is much more advanced. So we are going to quietly work away at Aquila Congo in the background. And we've just completed some work there, which will be announcing to the market shortly. And it goes without saying that we are very highly leveraged into the battery metals market. We'll talk about that in a minute. Excuse me. This particular slide, if people have seen my presentations and heard me talk before, you probably would have seen this in some sort of different format, but the numbers don't change because they represent forecasts that Benchmark Minerals Intelligence are putting out there to the market. Along the red curve, which starts to move up very quickly from about 2025, that's the forecast demand for graphite. And down on the bottom, those blocks that you see moving along there represent the forecast supply. And even with all the forecast and predicted, probable and possible additional tons coming from these existing and new graphite mines, you can see that even by 2040, there's just still a very, very small supply of graphite going into the world markets. But at the same time, there's a huge forecast demand that's just continuing to grow, largely driven by the EV growth. At the moment, there are about just over 300 battery mega factories that have been put into some form of commissioning in terms of either the very earliest stages of the drawing board or absolutely up and operating. But 300 of these represents about $600 billion worth, US dollars worth of investment, and they all require graphite. So there's a huge wave of demand that's coming our way, probably a tsunami, I guess. And we want to be in production around about 2025 with the main plant, with a project that has the ability to expand production quite quickly and cost effectively to hopefully play a big role in fulfilling that gap between demand and supply. This particular slide talks about the different uses of both coarse flakes, which are the large flakes, and down to the medium and smaller flakes, what they're typically used for. And as you can see on the right-hand side, the traditional uses, which is in thermal sheets, lining, steel foundries, flame retardants, expandables, etc. It's a growing market. It's growing at about 7 to 8% per annum, but it's not growing nearly as fast as the green blocks, which represent the it's actually a broader than just EVs. It's a battery market in general rather than just EVs. But EVs are definitely going to be the main component of the outstanding growth that is forecast for the next couple of years. And you can see that it's moving from about just over 1 million tons of demand last year up towards 3 to 4 million tons come the end of the decade. And This is not iron ore, this is not coal where you can go and start up one particular project that produces tens of millions of tons in its own right. This particular product that we're talking about as the tons in the slide is end product as a concentrate. So you're taking your raw material, your in situ 5 to 10% graphite, you're mining it and putting it through a processing facility, and you're ending up with a 95, 96% concentrate. It's that concentrate that's obviously worth a whole lot more money in terms of the value. It's that concentrate which we're talking about in terms of the numbers here. So in the same sense of base metal, if you're going to produce a copper concentrate or zinc or something similar, we're talking about a graphite concentrate. So that number of 3.5 million by the end of the decade represents a whole lot more graphite than the entire market has been predicted to supply there on that graph going forward. So this is where we're starting to see some big impact going forward, and we're starting to see the prices increase already. We have two highly synergistic projects very close to each other in northern Uganda. You can see there on the right-hand screen, they're near a regional town called Kitgum. There's infrastructure all the way through in terms of roads, right the way to our plant, to our project. And there's water, there's electricity. I'm glad to say hydroelectric power from the grid that we can connect up to. There's all the infrastructure, the major infrastructure as required to deliver a mining project. So we're blessed by that, because it means that it takes less time and less capital to put a mine into production. And that means I think that we're going to leapfrog quickly past a number of our peers, other graphite projects that may have stalled a little bit because they require a whole lot more money to build infrastructure, which also takes a lot longer. And we are able to move quicker to get this into production going forward. So we only started this project as Blencowe 2 years and 3 months ago, and we moved very quickly in terms of what we've delivered so far. But I think the real speed to market is going to be defined over the next 12 months as we move this towards first production and overtake many of those companies that either will stand still or may never go into production. And that's why those particular graphs we're looking at before are so flat in terms of the supply of graphite concentrate. Oran Cross is a substantial project. There's an estimated 2 to 3 billion tons over a very large tenement area. We've only touched a very small percentage of that, approximately 1%. We have a huge area that we can continue to develop, both in terms of a long strike. I think it's about 19 kilometers in all, and below the 25 meters that we've drilled. I think it goes down to about 100 meters, there's still graphite. So there's a lot more that we can tap into very quickly and very cost effectively. We were talking about this the other day, and for approximately another $1 million US, we could add a substantial amount of additional resource to the project beyond the 25 million tons that we've already got. Now, do we need to do that right now? No, it's not our priority, certainly not in terms of spending that money. But if the numbers start to change as quickly as we saw on that previous slide, we have the ability to drill out more and to expand our production to accommodate. PFS completed, and now the process is let's get towards first production from the second half of next year. So we are leveraged into a market that's going to rise pretty fast. Everybody's got a different view in terms of how this battery market is going to develop. Personally, I think that there's going to be some slowdown because there's just going to be shortages of key materials such as graphite to put into the batteries, and ultimately we're going to see the whole thing slow down. But you know, we want to be there, leveraged into it, working as hard as we can to deliver as much as we can into that shortfall. And Aquila Congo, a great nickel prospect. It was owned by Rio Tinto and an ASX listed company called SIPA Resources. They did a whole lot of work, around 19,000 meters of drilling, and they've uncovered a large-scale mineralized system. There's some both disseminated and massive sulfides in there. And our job will be to continue to develop that exploration work program. And we've just completed some electromagnetic work right now. And to see if we can build a scaled project that can obviously add nickel into the portfolio as well as the graphite. It's not our priority. The graphite is definitely a priority, but we'll continue to work the nickel in the background. So the PFS results, fantastic, 482 million net present value, as I say, post-tax 8%, 49% IRR, and that's delivered off just the first 14 years stage life of mine. So there's plenty more that we can add in, and we will add in along the way, but off the first 14 years, we're producing around about $1.4 billion worth of EBITDA, over $1 billion worth of cash, and all of that from a substantially reduced capital requirement of 60 million. When we did the PEA a year ago, it was 80, and that's because we're starting with a smaller project at the beginning, but we're just going to ramp it up in stages quite quickly thereafter. So the average production of concentrate that we'll be producing is just over 100,000 tons per annum, so approximately 1.4 million over the life of mine. And that is done at a very substantial margin. As you can see, if we're selling it for $1,300 per ton and producing it around about 500, that's where we're getting the margin. And that selling price has risen by about, I think, about $150 per ton since we did the PEA last year. So there's absolutely movement occurring in the graphite prices, and obviously that helps us a lot. And we are big believers that that will continue to rise going forward. Great results. I think those are standout. This is a project, as I say, that we acquired for £2 million about 2 years ago. This is our stage production program going forward, subject to obviously being able to raise funding, which we're going to do at a project level rather than at a Blencowe corporate level. We are looking to raise funds to build a project pilot plant next year, and that will essentially pre-qualify our end products into end users, so that we can show them that we can mine it, process it, and deliver it as an end product, or as a series of end products over a period of time, but the quality and the chemistry of that end product doesn't change. That's all very important in terms of having those end users scale up to allow us to deliver 36,000 tons per annum as a starting point from 2025 onwards. And that initial plant capacity of 800,000 tons can deliver up to 50,000. So we'll be ramping up towards that number over the first couple of years. And then we'll be building a stage 2 and ultimately a stage 3 plant that takes us up to a full capacity of 2.4 million tons and around about 150,000 tons of end product. The quality of the end products is really what's giving us such a great weighted average basket price for our end products. And that's made up of about 35-36% is jumbo and large, and the remainder is medium and small. The small flake sizes, the end products pricing has increased over the last 6 months, which is excellent, because that's the one that's going into the battery space and into the battery market. And we've got an 824 prediction there for 2025, but there are actually quite a number of forecasts that are predicting that to be over $1,000 per ton. So if that does occur, you can appreciate that we're heavily leveraged into that. It's about 40% of our overall basket, and any increments beyond that 800 for the small fines is going to make a big difference to the overall $1,300. So there's upside potential here for sure. And this particular slide talks about what we've done to date. We are very meticulous in terms of delivering what we say we're going to do. We delivered a JORC resource earlier this year. We delivered our final met test results. We completed our PFS. We're now in the process of identifying and talking to offtake parties, talking to strategic partners as well. We've effectively commenced our definitive study, and that's starting with talking to offtake parties and strategic partners on the one hand, but it's also going to be a stage P pilot plant study that we'll complete very quickly over the next couple of months, just to identify the cash that we require to get that up and running for next year. Ultimately, raise that cash, build that plant in the second part of next year, and then by the end of next year, finish the DFS on the main plant, decision to mine, funding in place. We can build it in 24 for 2025 startup. I just want to stress that all of the funding that we're looking to do for both the pilot plant and for the main plant here, we're looking to do at a project level. So we will give away some of the equity in Oran Cross at a project level in order to build the necessary equity, and then there will be some debt involved as well in order to bring it into production. So our intention to raise as little cash as possible to keep an absolute minimum what we would do at the Blencowe level, at the corporate level going forward. Life cycle sustainability is something that probably everybody's very much more aware of than before in terms of the ESGs, and it's hugely important to us. We're not only producing graphite, which is a product that's going to be going into batteries in particular, which is obviously very renewable focused, and that's got a nice ESG slant to it, but at the same time we're also going to be producing it from an operation that is heavily focused on sustainability at every level. So in terms of all the processing plant, we're going to be looking at grid energy coming from hydroelectric power. We're going to be powering our camp from solar, or we're certainly looking at it at the moment. And we've got options such as electric drying of graphite. So there's an enormous amount of work that's going on there. We've got some excellent consultants that we're working with. And we believe that it presents as a very strong face for this company going forward and for the project, obviously. The actual social development side is just constantly moving. We developed this agreement with the local community, and we're going to return value to them as we hit certain milestones within the project. We've already delivered 10% of that, which is about $180,000, and that's changed their lives already in terms of schools, scholarships, agricultural schemes and equipment and things like that. So yeah, we're very keen to see that the community comes along with us for the ride. So I guess I'm going to move on and end quickly so we can have some Q&A, but these are the key points that really make Oran Cross as a value proposition stand out. We've got a significant amount of graphite there, and we've only drilled out a very small portion of that. We can ramp up very quickly by drilling out some more, and we can be sure that the continued mix of coarse and smaller mesh in products will continue as we drill out more, and that gives us a very high weighted average selling price. Low operating costs, we've got low mining costs, we've got low processing costs, low power and energy costs, and ultimately we've got low labor costs as well. So they all combine to give us excellent margins, which I believe are going to rise as the price of graphite continues to rise with demand starting to push ahead of supply going forward. PFS showing us you've got a long life, profitable mine, significant cash flow NPV. We've looked at those numbers with a low capital cost to start up. Some of our peers have much larger NPVs than we've shown, and my personal belief is they are showing much higher initial production positions, 50 to 100,000 tons per annum of concentrate in some cases. I don't believe that that's doable. Not that they can't mine it, I just don't think that they'll be able to sell it. So we've taken a view of a more conservative starting position of 35,000 tons, which does mean our NPV got affected a little bit because we obviously are not kicking off at such a profitable position, but it means that we've got a lower capital cost, which is hugely important going forward. So capital cost is good. And then we're going to move forward as quickly as we can to get some first production happening to deliver a very high quality concentrate as an end product. And all of this from a safe location. We're very comfortable in Uganda. We've managed to negotiate a very advantageous tax exemption position going forward. And that's obviously going to help us. And ultimately, an experienced management team to execute this going forward. So a lot of good reasons, and that makes Oran Cross pretty standout. I'll just quickly touch on Akila Congo. I've mentioned most of this already, so I won't go spend a lot of time, but there's a lot of money that's been spent by CIPA and Rio Tinto already. You can see on the right-hand side some of the cross-section in terms of some of the holes that have been drilled. some very interesting mineralization down there. And we've just done a whole lot of electromagnetic airborne EM work that is showing some interesting anomalies that we'll be doing some work now to follow up and identify drill targets going forward. I think we're going to slow down our process of what we're doing on the nickel front for a little while, just to ensure that we preserve cash in this market. But we'll ultimately be getting to it because it's too good a project not to do work on. But it's definitely the secondary project, it's exploration, whereas obviously the work that we're doing at Orange Cross is the main priority project for us. Appendix has just got a little bit of JORC resource and metallurgy and the forward strategy in terms of the nickel. I can answer those questions on that if people want to go into some more detail. But I think that's enough for now. I'll probably stop there because that's probably the slide that most people want to ask questions about, what's happening with the PFS. And I will happily answer any questions that may have come through.
Okay, thank you for that, Mike. So yes, as I said, there's a Q&A box at the bottom there if you want to type in your questions for Mike to answer. So anyway, Mike, thank you for that presentation. So in terms of this, because you said the project is 100% owned at the moment, so that would obviously sort of give you scope to get in JV partners for the project if you wanted to.
Absolutely.
And at what point would you look to do that? Would that be now, or maybe at a later stage, more advanced stage than where you are at the moment?
Jason, to be honest, we're going out there, we're talking to people, we're talking to a lot of different strategic partners and potential partners, and they're all a little bit different. Some of them like a bit more of this, some of them like a bit more of that. We are going to have lots of different options put in front of us. Our job is to make sure that we get this thing up and running and give away the least amount possible. So we definitely want to put some debt in there. Traditional bank debt, highly unlikely because you can't forward sell graphite, but there are parties out there such as the Development Finance Corporation, African Finance Corporation as examples, but many other parties that are very interested in funding and financing debt within a project of this sort. So we're looking to put some debt in there. And in answer to your question, I want to find a strategic partner now and present the entire forward 2 to 3 years in front of them and basically get somebody in that. I don't want to end up with a piecemeal strategic partner now, then we've got to go and find another one in a year's time. So if this appeals to a party, then they need to come and work with us to deliver basically the pilot and main stage. Obviously, their money for the main stage will almost certainly be subject to completing a successful definitive study, but that's fine. But we need to have a partner that's negotiated and brought in and playing the whole game with us, not just one quarter, if that makes sense.
Yeah. Okay. That's good then. Yeah. Okay. And in the RNS last week, it talked about you applying for the free trade zone license. When do you expect to have confirmation of whether that's been granted?
Well, these things always take a little bit of time. I mean, they're telling us that it can take 3 to 6 months. So I would guess I would anticipate it would take the longer part of that, 6 months. We could only put the application in once we had completed the PFS, because you have to use some of these figures that we're looking at in terms of your production rates and et cetera, et cetera. But I would hope to have it by the end of the year so that when we start bringing equipment in for the pilot plant, then we get a lot of tax breaks on that. And ultimately, we can springboard off that to get this 10-year tax exemption going forward. So it's a fantastic opportunity, and we're already working on it. My COO is actually over in Uganda next week, and he'll be putting in that application Wednesday.
Okay, that's good. Yeah, is Uganda is it a sort of mining friendly jurisdiction? Do you have sort of contacts with the mining minister in Uganda? What's your sort of?
Yeah, we do. Look, I think it's very mining friendly. I guess everybody has their views. I'm, as you can probably tell from the accent, from Africa, so I know Africa pretty well, and it's definitely one of the better locations that I would ever go and do anything in Africa. We've developed some very deep and strong relationships in the government at pretty senior levels. We've got a couple of ministers that are very close to this. And it's very prestigious for them if we can get this project up and running. So it's a win-win for everybody. And, we absolutely are so happy to have their support, and we appreciate it. And I think we had a whole bunch of ministers come along when we presented in April in Uganda, and we will definitely catch up with them and talk to them as we go back. And they want to see what's happening. They want to see progress. Everybody wants to just see that you're doing something with it. So it's a great location. It's safe. We're comfortable with the safety, and not just in terms of security, but in terms of the ownership of the project. I couldn't be happier, to be honest. I don't think there's anything I can say that has struck me as being untoward. And I've done this in a lot of countries around the world and faced some untoward stuff. So I think it sort of stands out as being one of the better ones. Yeah.
Mm-hmm. Okay, good. And just some questions have been coming through. So in terms of the capex, what's maybe sort of too early to sort of answer this, but in terms of what the structure for that would be sort of mainly debt or equity funded? Have you had any thoughts on that?
That 62 million there that you see for the capex, we would ideally like to get about 60% as debt. So that's going to be in the order of about $38 million. These are very precise numbers, so I'm saying around, and the 40% as equity. I guess the more we can get as debt, the less we have to give away of the project as equity in terms of getting that portion. But at the same time, debt providers typically don't go above. I've seen some cases where they go up to 70%, but you have to have very specific, very specific regime in terms of what you repay and how it goes, etc. So I think the likelihood is that we could get up to 60%, and that's what we're aiming for as debt. And the pilot plant, we think we'll take approximately $10 million, and I don't have a feel yet as to whether we'll be able to get debt on that against equity. Hopefully we can. And we'll just see. Again, if we could do it as a 60-40 split, that would be great. But I've got to have those discussions going forward.
Okay, good. Right, another question from one of the participants. So the MPV figure of $482 million, that is based upon, can you just confirm again, that is based upon 1% of the total mine area? Is that the figure?
Yeah, look, I haven't gone out there with a compass and a protractor and worked out to the exacts, but we've got a huge area. We've drilled a very, very small portion of that, and even within the area that we've drilled, we could be drilling down to 100 meters below surface to continue getting graphite, and we've only drilled it to about 25 meters. So that small area and only drilling relatively at the surface has delivered us a 14-year life of mine. Right next door, the continuation of this particular areas that we're going to be mining, there's more, so we can continue either at a deeper or a long strike. And we will. Along the way, we're going to continue to drill. There's a couple of higher grade zones that we might have a look at, but it just doesn't make sense to go and take another $1 million at our share price, what it sits as today, and go and dilute everybody to add another 10 years of mine life when it's really not going to add much more. Well, it will add more, but obviously as you add year 15 to year 25, it doesn't have as marked an impact as year 1 to 14. So we'd be spending a lot of time, a lot of money, and it's not really the priority at this stage. But we're all sitting here watching this particular graph here and wondering how it's going to go. We're already starting to see the prices rise, and that's driven by a demand that's exceeding supply in some quarters. So if that continues to rise, and these forecasts are suggesting that it will, then we want to be able to increment our production very quickly and very cost effectively. So we already have quite an ambitious scaling of production through the 3 stages here, but there's nothing to stop us lifting our capacity in, say, stage 2 or stage 3 from another 800,000 tons to 1.6 at each stage, to suddenly lift this 2.4 up to 3 or 4 million tons per annum We can drill out further graphite as a resource to fill that. And yeah, it's very, very doable based on what's out there. And we're just going to sit and watch the market. This is a very good profile of production and sales based on what we know today.
Mm-hmm.
But if the profile starts to radically alter, as most people are predicting and forecasting, then we definitely want to have that ability to be able to upscale. And if we're out there already in production, we've already got all our power connected and our roads and our end users and our people to run it. And really all we're doing is expanding what we've got in production already. That's a far easier task than trying to start something from scratch, which obviously a lot of people are going to be reacting and trying to fulfill. So yeah, I'm comfortable with the strategy. The next step is to find the strategic partners that will work with us to bring it into first stage production and then ultimately main stage production. And they're out there. You'll be surprised. We've had, I won't say inundated, that's probably a little bit of an over-exaggeration, but we've had many, many calls, emails, contacts, etc., from some large-scale parties that are very interested to work with us going forward. So these things take time. It's not something that we're just going to have a phone call and sign an agreement the next day. They obviously want to understand what we've got. They want to understand our strategy. They want to understand how much we require in terms of cash. But the beauty is that we've got this market that's humming away in the background and continuing to hum, and that adds competitive tension into the whole equation. So there's more and more of them coming to have a talk and have a look at us. And if I go back to the slide down at the bottom there, as I said, on the left hand side, there's 300 mega factories coming online over the next 5 years. Huge anticipated requirement for them. $600 billion worth of investment, and they need graphite. Otherwise, they essentially cannot deliver product. It's as simple as that. So, yeah, we're going to be talking, and we're going to be working, and we're going to be finding the right partner and negotiating as obviously hard as we can to get the best possible deal, but ultimately moving us much quicker, hopefully more nimbly into production than some of our peers who seem to be a little bit becalmed at the moment because they've all sort of gone out there and thrown these crazy high NPVs that required huge capital requirements to happen, and suddenly they're finding that raising that sort of capital of that quantum is very, very difficult. So yeah, we'll play it our way and we'll see where we get to.
Okay, good. So another question come in here. So have graphite samples been issued to any offtake partners as of yet? And if so, how many?
So just say that again, please.
Have graphite samples been issued to any potential offtake partners as of yet? And if so, how many?
No, not yet. As yet, we've identified the parties. They're waiting, and the reason we haven't done that is the original work that we did in Canada with SGS produced a relatively small quantity of end concentrate. By small, it was literally a couple of kgs, whereas we need to get our hands on about 70 to 90 kilograms of end product. So we've got a program that's commenced here in Perth where we've taken some of the core from our more recent drilling, and we're basically going to be producing around about 80 kilograms of end product over the next 2 months. Because the minute we press the button and start talking or sending samples and technical data sheets to these end users, the next thing they're going to ask us for is to please send samples. And I don't want that process of sending them samples to take another 3 months. So about 3 or 4 weeks from today, when we're about halfway through that program of delivering that next 80 kgs, then we'll really start ramping up. And we've identified exactly who we're going to send them to. We've got an experienced sales and marketing consultant working through that. So I don't think it's going to take an awful lot of time. I've already been approached by some of them, but in truth, in honest answer to your question, no, the samples themselves haven't gone. But actually, the first thing that will go will be the technical data sheets, and then they will have a look at that. And if they like what they see, because there's different products for different parties, they're not all going to like one product, and there's not one party that's necessarily going to take all of them. But once we send the technical data sheets, then the next question will be, have samples ready and waiting to send to them as the next step. And that'll happen shortly.
Very good. And another question here. So how do you know that synthetic supply won't increase more than indicated on your graph that you're showing here on your screen?
Well, first of all, it's not my graph. It's Benchmark Minerals Intelligence graph. And they do a heck of a lot of work, because I've seen their spreadsheets that make up, this is actually the front page of an incredibly complicated and complex spreadsheet, where they take literally all the graphite projects in the world that they can see as being relevant, and they predict a whole series of different factors in terms of how much they might be able to produce, how much they can, etc. And that includes synthetics. Yes, there's always going to be synthetics in the market, and I believe it's got a place. I mean, synthetic graphite is a fabulous product, and there's no question that it's a key component of the story going forward. The issue with synthetics is number one, it's very expensive, and number two, it's obviously energy intensive in terms of delivering it. So whilst I think a lot of the end users would like to have a lot of it, I think the cost and ESG parts to that will keep that level at a level that BMI are predicting on that graph.
Okay, good. And so just going back to the previous question on the graphite samples, did you say the technical data sheets have been sent? I can't remember.
No, I said that the technical data sheets are going to be sent over the next couple of weeks.
Right. Fine, okay,
as our core has gone in now to the labs here in Perth to deliver this 80 kgs, they tell us it's about an 8-week process. So I want to be about 4 weeks into that process when people start coming back at me and saying, I want to see samples, because I can delay them for a couple of weeks, but I can't delay them for a couple of months. Otherwise, they're going to lose interest and they're going to go and look to somewhere else. So within the next couple of weeks, we will have technical data sheets out there. We will get responses back, and we'll be starting to send samples as soon as they're ready.
Okay, good. Yeah, that was just a clarification question there. So in the presentation, you've got the board and management have got a 9% shareholding in the company at the moment. Given the sort of low share price at the moment, have you or any other directors considered increasing your shareholding in the company?
Well, we always do. I'm not sure, other than the 10% that we obviously issued to get RAB in April, I think every retail capital raise that we've done so far, we've participated in. So, we do participate, and likely that we'll continue to. We just obviously, it's subject to myself and any other directors having, the ability to participate and how much they can do. It's up to each individual. But we could all put our hands up and say that we've participated along the way. And you, of course, know that because you've been managing some of these for us. But the reality is, we don't want to be raising a whole lot of money going forward at the Blencowe level. We want to keep that down to an absolute minimum from now. And we want to raise all the cash that we can at the project level. That's an absolutely critical step for us going forward, because we're all in the same boat together as shareholders, and we can see the dilutionary impact of raising a lot of money in Blencowe going forward, particularly at these prices. So it makes no sense to do that. We'll be able to negotiate and discuss much higher valuations in terms of new entry at the project level. So we've just got to I don't know really to say more than that. We will participate. If there is anything going forward, we will probably participate, because we have done in the past. But as I said, we want to keep that to a minimum.
Okay, good. That's fine. Good. Okay, so just come back to the timeline, one of the timeline slides in the presentation. So just to sort of summarize again, so what's the next sort of news flow in the next few months? What's most likely to be announced? Can you just sort of?
Well, there's a lot of things that will happen, because as I said, we've done a bit of work on the nickel project, so we've got announcements that are going to happen there. We've definitely got some, the whole sales and marketing and offtake strategy has commenced. So there'll definitely be something happening there. And, you know, we're just going to continue to work through this whole plan and this whole program. There's going to be a study that we completed on the pilot. It's just, you know, from everything from announcing that we've got obviously the export trade zone license in there and working as well. So there's just different facets, and we'll obviously put it all out there to go forward. But you know, one thing that you'll notice is that we're not standing still.
Yes, so good to see then. Yeah, good. Okay, so I think that's all the questions answered from our guests here on the webinar today. So that's very good. So the presentation you've been showing here, is that the same one as is on the website at the moment?
Yeah, that's the same one on the website.
Yeah.
So anyone can download it.
Okay, that's good. Yeah.
You know, I'm more than happy to take any other questions. Some of the people that may be listening have contacted me directly or gone through yourself or through Sasha or other people. We're always happy to try and answer questions. We don't have anything to hide. We're pretty open bunch of people, and I guess I just wanted to say thank you to everybody for taking, you know, the better part of an hour or whatever it's been, and coming on board and listening, and hopefully realizing that, you know, our share price and our market cap as a percentage of value of this project is incredibly small, as is the amount of project that we've drilled out. We've got plenty of upside on both of those. So keep watching. You know, we're working hard to address that share price. We realize that we're in a tough market, but we want to be a standout because people are going to start hunting around for real bargains, for real value. And we want to make sure that we're right up there in terms of what people are looking at. So again, thank you for being here.
Yes. Thank you for that, Mike. Yeah,
Jace, thank you for organising it, and have a great day.
Yeah, okay. Yeah, thank you very, very much, everyone, for joining us on the call. As I said, so the presentations on the website, and if you've got any further questions, then let me know and I can pass those on to Mike to answer. Thank you very much, everyone. Yeah, goodbye.